to Joy Daily News. I'm Hannah, and we are back with the latest news on the steel industry. India's leading stainless steel producer, Jindal, has reduced the prices for 304 and 304L grade yesterday by 3,000 rupees per ton. Due to the stagnant demand in domestic markets and reduction in nickel prices, the decline was visible after 2 months of continuous increase. In May, China's future prices of stainless steel continued to climb while spot prices remained relatively stable. The fluctuations in future prices were primarily driven by macroeconomic factors and raw material supply. In terms of nickel ore, the slow allocation of Indonesian nickel or RKAB quotas has reduced the diversity of nickel ores. The latest information indicates that Indonesia has approved quotas sufficient to support nickel ore supply in the first half of the year, although the approval progress seems slow based on the newly added quotas. In the stainless steel sector, market feedback suggests that Indonesia's Yong cold roll mill plans to halt production for 2 months starting in June. The specific resumption time is yet to be determined. Additionally, the estimated production output of stainless steel smelting in Indonesia in June is around 400,000 tons, necessitating further attention to return flow of Indonesian stainless steel. Preliminary estimates indicate that the raw material side remains robust, with an anticipated increase in steel production costs in June. Lihwa, a stainless steel wire rod and cable producer in Taiwan, announced that in May, its consolidated revenue increased by 2.98% month-on-month, but decreased by 11.48% year-on-year to nearly 15.7 billion Taiwanese dollars, hitting the 8-month record highs. In the first 5 months, its consolidated revenue totaled about 71.4 billion Taiwanese dollars, a year-on-year decrease of 15.59%. Nickel and copper prices rose, especially LME nickel prices, which rebounded to around $20,000 in May, thus driving the growth of Walsin Lihwa's revenue in May. Last week, the Bank of Canada announced a reduction in its target for the overnight rate to 4.75%, with the bank rate at 5% and the deposit rate at 4.75%. The bank continues its policy of balance sheet normalization. Global economic growth stood at approximately 3% in the first quarter of 2024, in line with the bank's April monetary policy report projection. However, the U.S. economy expanded slower than anticipated due to the weaknesses in exports and inventories. In the euro area, activities increased in the first quarter of 2024, while China's economy showed strength, supported by exports and industrial production, despite weak domestic demand. In most advanced economies, inflation continues to ease, although the progress towards price stability varies. Canadian economic growth resumed in the first quarter of 2024, with weaker inventory investment dampening activity. Overall, the recent data indicates the economy is still operating in excess supply. Global manufacturing remained under pressure in May, with the global manufacturing PMI in the contraction range. Despite some improvements in European manufacturing, factors such as geopolitical conflicts, economic policy uncertainties, debt distress, and inflation continue to impact the global economy. China's manufacturing new exports orders index declined in May, signaling potential pressure on overseas demand. Global crude steel production also decreased annually, with the declines in all regions except Africa, which showed growth. China's steel exports prices remain competitive internationally, though the advantages is narrowing. While steel exports to the EU have rebounded, tightening trade sanctions from Europe and the US may limit the future exports. This is all the news for today. Thank you for watching and see you in the next episode.